Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
LME 3-month nickel. I said 13 weeks ago how the two recent bearish patterns in this market, that is the two bearish shift pitchforks, smaller August 2023 base one and the larger mid-June to early August 2023 one, how their very active separation was going to rip each pattern to pieces and that neither would come from the action unscathed. Well, it happened in late October last year, with prices exiting both pitchforks and the smaller August-based pitchfork no longer involved with the market. Interestingly, after the breakaways, the market started initially tracking down the outside and below of the broken lower tie, currently at 16,380. A procedure I had seen elsewhere in other markets and in other pitchforks. There had been some deviations lower to make a small sideways triangle, for example, over November and December last year, but overall prices have tracked sideways to just under the broken lower tie until 3 weeks ago. Okay, stepping back a bit. Now, 12 weeks ago, I said about this sideways movement of the market, and I quote, "I suspect this seeming sideways movement may not last, as coming in from above, we have the declining short-medium moving average, currently at 16,685, which may well apply pressure on prices and cause an action or a reaction," end of quote. Well, in late January, it did, and the market fiddled with the short-medium moving average, and we had a reaction. Prices made a reactionary move back down. I said about this 4 weeks ago, and I quote, "So, just think, if this is what the declining short-medium moving average can do, imagine what the next, more powerful declining moving average might achieve." We now have the medium moving average, which is currently at 16,915, dropping towards the frame. The only issue is the market's creating some support just ahead of the 2021 low at 15,665, and I'm wondering if this will be enough to hold prices higher as the medium moving average moves down towards the market, end of quote. Well, I was wrong. The market rose up through the lower time and shot up through the declining medium moving average 3 weeks ago, almost as if it wasn't there, and making a mockery of the supposed strength it might have been. Indeed, prices used the medium moving average along with the June 2021 low at 17,095 as a base of support for a move higher. Through the October 2019 high at 17,815, then the broken middle time, currently at 18,005, of the larger mid-June to early August 2023 bearish shift pitchfork, and this week through the July 2022 high at 18,265. Thus, the large base of action formed over November 2023 to February 2024 has been enough to significantly turn prices higher. So what's next? Well, next overhead is the June 2021 high at 18,610 and the August 2019 high at 18,850. But in between them, we have the gold highlighted slowly declining long moving average, currently at 18,695. Should these three now be taken out, then we have little in the way until the September 2022 low at 20,045, bar the broken upper time, currently at 19,625. Now, I've been contemplating what sort of pattern the market's creating. My initial thoughts 2 weeks ago were to look at the early November 2023 today action as a possible rounded bottom pattern. But the more I look at it, the less I like it. Instead, and I have not marked this yet properly on my daily chart, I've given it a label, but I'm inclined to look at the whole early August 2023 today action as a possible descending scallop pattern. This has merit, but it's very elongated, and that is a negative point. The main thing in its favor is a new pattern I suggested might be created 2 weeks ago, and which we have indeed completed, and that is a monthly key reversal up by some considerable distance for February. Thus, I'm looking now for where the hesitation would be for such a descending scallop pattern on the top side. LME 3-month zinc. The big picture here is based very much on actions originating from last year, with some limited skewing, I suppose. You see, we've had two competing shift pitchforks here. We have a late May to mid-August 2023 mildly bullish shift pitchfork, which is highlighted in bright red on my daily chart. The market's currently just over the middle time, and that's currently at 25.53, with all the moving averages clustered underneath it between 24.50 and 24.93. Now this segues into the second shift pitchfork, the very larger, very large May to August 2022. That's right, a pattern that's a year and a half old. The May to August 2022 bearish shift pitchfork, which is highlighted in purple on my daily chart. In this one, and it is a very important thing to note, in this one, prices late last week and this week have punched up and out of on the top side of this venerable pattern over the upper time, which is currently at 25.19. This had been the rub of the market, and as I said 2 weeks ago, and I quote, the upper time of the larger purple highlighted bearish shift pitchfork is now well within the smaller bright red bullish pitchfork. Indeed, they cross over on the unusual 29th of February this year, end of quote. I further added, and I quote, I would now like to emphasize once again how this bearish shift pitchfork, which is now well over a year and a half old, I wish to emphasize how it is still working in the overall bigger picture to drive prices lower despite moves upwards during 2023, including the monthly key reversal up we saw in December last year. One way or another, the tines are being tested here. The question is whether the bright red bullish shift pitchfork will give way and we see prices move down through the lower tine again, or will the bigger purple upper tine give way and we have a whole new potential outlook on this market. As I said, during January and February, we should now know by the end of February, and probably sooner, end of quote. Well, it took a little longer than I anticipated, but prices have broken higher up and out of the purple bearish shift pitchfork. Question now is what's next? Well, we have an old congestion at 26.01 and at the March 2021 low at 26.27. However, I suspect the next key level to look at topside is the area of the triple top, the unfulfilled triple top formed over late September to end of December last year in a 26.70 to 75 area. That will be a key level on the top side, because if they are taken out, those two levels, or that whole area, then there is really nothing much topside until the bright red upper tine, currently at 27.18. LME 3-month tin. There are multiple major patterns visible here on this daily chart. We had the late July to start of October 2023 bearish halfway hesitation, which did not live up to its fullest potential, as prices ran into just two significant supports, stopping the decline. The first was, still is, an obvious one. It is part of a series of congestion bands below, specifically between 23.80 to 24.155, and then between 22.895 and 23.555. I've spoken about these congestion bands numerous times, so they should be familiar. The second pattern utilizes the same unfulfilled bearish halfway hesitation as part of its structure, and that is the June to October 2023 head and shoulders pattern. It is by no means a great looking pattern, with the second shoulder having quite an extension on it, or the previously mentioned bearish halfway hesitation in other words. However, it had been good at defining the lower end of recent market action. Plus, there is an additional consideration to take into account here. It was the September to January 2024, September 23 to January 24 downtrend, which, if we take this into account with the neckline, then the action since late summertime last year becomes a bear channel. This year's action has seen the market push back up from the congestion bands below and over all the moving averages up to highs not seen since August of last year. This emergence led me to the next, but barely just possible pattern here. A mid-October 2023 to late January 2024 inverted head and shoulders pattern. The dark blue highlighted neckline, currently at 26.510. Now, I said 5 weeks ago, and I quote, "You see, I'm not happy about this reverse head and shoulders pattern. I see myself trying a little too hard to optimize this pattern to the information available. And whilst it looks okay-ish, I'm still not happy about it, hence the moniker of a possible reverse head and shoulders pattern," end of quote. Now, I even went as far 5 weeks ago as laying out some potentials above, which have since become targets. Thus we have a primary target X in the 28,100 area, with a secondary hard to reach target X1 up in the 28,895 area. Now this brings me to another pattern, and one related to the reverse head and shoulders pattern, and that is a mid-October 2023 to date ascending wedge pattern. You can see this highlighted by two trend lines. The lower trend line currently at 26,085, highlighted in bright red, and the neckline currently at 26,510, highlighted in dark blue on my daily chart. Now this ascending wedge pattern, along with the reverse head and shoulders pattern, has given us some additional potential targets above of a primary target X2 in the 28,360 area, and a secondary harder to reach target X3 up in the 29,600 area. Okay, so you may think that may be all, but there is a further final pattern that is developing, and it is related to the lower uptrend stroke lower trend line of the ascending wedge pattern. You see, it seems the ascending triangle pattern has morphed into another pattern, this time into a bull channel, a late December to date bull channel, currently 26,085 to 28,790. To help aid in seeing this pattern, I've highlighted the upper bull channel line, also in bright red, as the lower bull channel one, as I said 2 weeks ago, and I quote, "Of all the patterns, I think this is the one to pay close attention to, as it's still fairly young compared to the others, but is also the most potent."
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.